Start.
Morning to all participants. Today, the topic is banking and finance in the corporate sector. This presentation explores about the banking and finance and its role in the corporate sector. We will cover all important and key aspects of banking and finance. Understanding these elements is crucial for navigating the financial landscape and ensuring corporate stability and growth indirectly or directly to the economic growth of the country. Now, who gets benefits from this corporate banking and finance? Let us see. Private banking, private limited companies, number one. Number two is public limited companies and LLPs and partnership firms. Private sector, in the sense, MSMEs, startups, and family owned businesses seeking growth capital and operational financing. This, when they want to start MSME, what is MSME? Medium and small scale enterprises. When they want to start, they need some finance or funding to expand its business for its operational uses. As we have already discussed earlier with regard to the raising the funds through IPO, and the other one is banking and finance. This helps the private sector banking, private sector companies, public limited companies, and LLPs. LLP is in the sense limited liability partnership firms. Let us come to the point number two, that is public limited company. How they are going to be benefited from banking and finance. Both listed and unlisted corporate leverage banking for capital markets, access, and large scale projects. That is, companies, that is, corporate companies, they get leverage from banking. Leverage in the sense they will get some space to use the funds, raising loans from banking or financial institutions, so that it can increase its capital in the market and go for the large projects also. Next, coming to the limited liability partnership. This limited liability partnership in the sense where their liability is limited and they cannot raise the money from banking beyond its limits, because it specifies itself that they are limited by liability. They cannot go beyond that liability which they are supposed to raise the finance from the banking or finance or institutions. Coming to the fourth point, that is MNCs and government companies. What is MNC and government companies? MNC in the sense multinational companies. These companies are present, their operations are registered firms in more than one country. They are existed in one country or more than one countries. They can go beyond 100 countries also in the world. They are called MNC, multinational companies like L&T. L&T, which we are seeing now, they have ventured the projects in Hyderabad, like construction of projects, flyovers, national highway roads, etc. They are into different verticals of operations, like mining, petroleum, etc. These foreign companies, that is MNCs, they are present across India and across the countries in the globe. What is government companies? Government companies in the sense where the interests are present in the public sector undertakings. They rely on corporate banking for their extensive operations because they want to go beyond the certain limits in order to go for the development of the country. So they will use this banking finance and they will extend its operations. Number two, next, key areas of application. Where exactly this is applicable? Let us see. Working capital and trade finance. The finance can be used in working capital. Working capital in the sense to operate its operations, to carry on its operations, it raises the funds for working capital, and also it is kept in trade finance. Trade in the sense exchange of goods and services, essential for day-to-day operations and facilitate international trade transactions also. These operations can be in international, that is with the other countries of the current country where they are going to operate. Project and infrastructure financing, funding for large scale development projects and critical infrastructure initiatives. Like we are seeing a lot of development in Telangana as well as other states of the country, because PMO has taken a decision initiating that National Highway Authority should be given some authority where they will develop the roads connecting one state to other state is called National Highway Authority, which is established by PMO in the parliament. These to develop these roads, it will requires crores of rupees, not in hundreds. It will be in thousands of crores. Where it requires money, so they will raise from banking, financial institutions, etc. Where they are supposed to answer to the bank. Funding for large-scale development projects and critical infrastructure initiatives. Infrastructure in the sense like flyover bridge, which we are seeing in Telangana. They are called infrastructure development. Next, capital markets and M&A funding. What is capital market? Accessing public, where public can have access, and private capital for expansion, mergers and acquisition. Suppose a company wants to take over some other company, the company where they are suffering financially or operationally, whatever it may be, they will take over the company. It is called merging of the company. Takeover, merging. Merging of the same group of companies where they are suffering or facing a lot of financial problems. So it can also be used these funds by raising financing from banking. Next, venture capital and private equity. Specialized financing five for high growth startups and established private companies. Venture capital means already the management has taken a decision to go into the new projects or to venture into the new boundaries. So they require some common kind of capital. This is called venture capital, and private equity in the sense where the promoters will invest in the company as a private equity. Eligibility criteria for corporate financing. That is company age and turnover. Eligibility in the sense before financing banks to any company or a LLP, whatever it may be, they will see the eligibility criteria. First of all, it will see age, the age of the company. That is, this company is existed since how long? Say, for example, it is existed for more than 10 years, 15 years, or 20 years. That is age. They will take that count as a age. And also they will see the turnover of the company continuously for last 10 years or from the existence to till date. Typically, a minimum of 1 to 3 years in operation with the turnover ranging from 50 lakhs to 500 crores. It will depend upon the person who is applying for the banking finance. Say, for example, companies whose turnover is 100 to 200 crores, they will also can raise the finance from banking, but subject to eligibility criteria. Otherwise, they will not get the funding. They also see the track record of the company, whether they can lend the money to this company. If they are wanted to raise 120 crores, they cannot just like that go for a raising that 120 crores. Next, credit score and financial stability. Credit score in the sense it will track the transactions by the bank, how this account is, whether it is in good health or not. That is given by the private and public sector companies or institutions. Strong CIBIL means credit score, which will be assessed by the CIBIL authority and CRISIL by the companies. It is also one institution which will rate the companies going into the deep details of the company, track record, eligibility, age and turnover, the strength of the company, and give the report to the banking. Because before raising the issuing the or sanctioning the loans, it will ask for CIBIL or CRISIL report ratings, which will form a base for the banking to sanction the loans. And healthy debt equity ratio. It also takes the parameters of debt equity ratio. Debt should be lesser and equity should be more. Say, for example, debt is 1, equity should be 2. It will be in the ratio of 1:2. That is a good and healthy nature of the company. Then bank will be ready to sanction the loan. Next, promoters profile and collateral securities. Promoters profile, it will go through the promoters. Who are promoters? The people who are ready to start the company or float a company. It will see the promoters profile. Profile in the sense name, Aadhaar card, PAN card, their history, their financial strength, their assets and liabilities. They are ready to forego the assets in case of any losses which is going to be incurred in the future. This they will track all through promoters profiles. And collateral securities also, it is mandated to take charge. The bank after sanctioning, before sanctioning, it will ask the promoters, they are going to take the collateral security in the unforeseen situations. That is mortgaging the properties. They will attach the properties to the loan. Lenders assess the experience and background of promoters and often require movable assets as collateral. Regulatory compliance. They will follow this regulatory compliance very strictly. Banking, because it is a public money which is kept in the bank, they will thoroughly check before sanctioning any loan. So they will follow the rules very strictly by taking KYC norms, following the KYC norms. What is KYC? Know your customer. KYC means know your customer. They will take complete documents, information, data, everything before before sanctioning any loans, whether they are filing correctly or not, in time or not, by seeing all the websites, governing bodies, etc. in the portal. Next, promoters benefits of corporate banking and finance. What are the benefits of corporate banking and finance? How it is going to help us? It will access to large capital, which will give lot of a flow of money to go for an operation of the company or putting into the manufacturing industry or infrastructure development, etc. Enable significant investments and expansion opportunities for businesses. For example, we are seeing that Telangana is inviting foreign direct investment, that is called FDI. How they are coming? They are seeing the Telangana state has developed a lot where we can invest money. There is no problem. They will see all the parameters. My money is safe or not, first. Second, whether my operations or manufacturing unit in Hyderabad can carry on properly, in timely, and I will get the money or not. What are the risks like earthquake or any massacre, etc. They will see all the parameters and everything. When everything is fine, they will be interested to invest in that particular place or state or area. So it will give indirect signal to the foreigners to invest in that particular state. For example, in Telangana, this gives access to large capital. Once a banking is sanctioning loans to that particular company or corporate, which will give or shoots indirect signal to the foreigners that they can invest their money and their money is safe. They will get their money back. Next, working capital management. What is working capital? This exact capital is used only for the purpose for which they bought it. That is working capital, and this is managed by the company properly. Optimizes daily cash flow and operational efficiency. They will see there will not be any kind of a disturbance in the flow of the money, that is cash, in its operational to increase its efficiency. It will always maintain its efficiency by keeping the cash flow properly and healthy. Improved credit profile. This all leads to the credit folio maintains very strong. Responsible financial management enhances a company credit worthiness. These all workings will directly help the company to maintain credit worthiness. Next, risk diversification. Spreading financial exposure across various instruments and lenders. This will directly expose to various lenders. This information also will be verified by the lenders. They will monitor very closely because your operation will be routed through bank. Your transactions are routed through bank. Hence, there will be a close monitor by the banks once they sanction the loan to the company. Common violations and frauds. What are common violations and frauds which is happening normally is KYC non-compliance and loan misutilization. KYC non-compliance means when bank fails to keep up its KYC norms properly, not keeping that properly, not checking it properly, this will lead to non-compliance of KYC. Loan misutilization. This may lead to misutilization of the funds. It may be diverted to the other group companies. Actually, the fund will not be used for which it has taken. For example, if I have taken the money to construct the road between High-Tech City to Secunderabad, if I use that money to some other project in Kerala, this is called misutilization of my loan. Next, accounting malpractices and insider trading. How it will happen? Accounting malpractices in the company by changing the records, misutilization, and this is used for trading on confidential information for personal gain only, but not for the company. So it will definitely gives the indirect signal to the banker that these funds are being used insider trading or malpractices is going on. Third one is non-disclosure and regulatory breaches. Non-disclosure means if the company fails to disclose the data or information or sharing the information with the bank may lead to non-disclosure and this may lead to the regulatory breaches. Breaches means misgiving the information, leading to the wrong information, withholding critical information and violating established financial regulations. Loan fraud and round tripping. The company should be very careful with regard to the loan fraud and round tripping. Using fake invoices. Like there is no transaction, but still company raises the invoices. They are called fake invoices. And shell companies, recently we are seeing in the news that shell companies are also put into problem. And it has been referred by the authority called Enforcement of Directorate. They are seeing that file. Shell companies for fraudulent loans and laundering funds via overseas routes. Via overseas means through other countries. Remedies for financial misconduct. How we should come out of these problems means internal controls should be established and they should properly monitored closely by the company higher authorities, that is management and corporate governance. They should follow the corporate governance very strictly and adhere to that in association with the company secretary. Implementing robust internal checks. They should have a proper checks internally, thoroughly, systematically, and periodically. If they want any guidance from anybody, like chartered accountants, who are very helpful to the companies, they can take a chartered accountant's help also for how to establish the internal checks properly and should be in place, so they can take the guidance from chartered accountants. And strong governance framework to prevent issues. This will lead definitely, and it will prevent it to not to happen any mis misconduct or leading to any frauds. This will help the company. Next, legal action and forensic audit. Forensic audit is one of the audits which plays a vital role in India now, currently, which requires also. Now, the government is also inviting uh, private chartered accountant firms through CAG, that is Controller and Auditor General of India. It is directly reporting to PM office. So they are inviting private chartered accountant office firms for carrying on audits in public sector companies and government companies, and they want to use this tool called forensic audit. Forensic audit will definitely establish to evaluate the errors, and it will filter all the problems which are leading to a lot of financial losses. Now we are seeing here and there in the news, they are catching so many people who are unable to catch, which has led to misconduct of government officials. I should not talk. Okay. Utilizing legal avenues like NCLT. What is NCLT? National Company Law Tribunal, DRT, Debt Recovery Tribunal, and SARFAESI Act. SARFAESI in the means that is an act which is going to protect or establish Security Interest Act, which is normally referred to the companies which are already in the NPA. NPA in the sense a non-performing asset. A company is having account with the bank and they are not paying interest also, minimum interest monthly or quarterly, whatever it may be. And this they will observe the bank closely, and they will inform the company that you are not paying your interest, minimum interest also, and they will give some sufficient time. After that, it will be transferred to NPA account, that is called non-performing asset. Even non-performing asset, they will monitor for 1 year or 2 years. Thereafter, this file will be given to NCLT. After that, DRT. From there, it will go to SARFAESI, where SARFAESI will protect the bank because it has given money or loan to the company. How it has to recover? This SARFAESI Act will protect the bank, all the financial institutions from incurring losses. So this will protect SARFAESI alongside detailed forensic investigations. This forensic audit report will help them to evaluate and how they should recover it from the promoters or a company, whatever it may be. In the beginning, I have told that before sanctioning any loans, the banks or financial institutions, they will take promoters properties, assets, land, vehicles, etc., whatever there in their name, and they will evaluate what is the exact value on that date. And now there is a problem, so they seize all the properties and recover the total amount from the promoters or the person to whom they have given the loan. Restructuring and whistleblower mechanism. This this restructuring will give them enough time. Whistleblower, financial restructuring to address the distress and establishing channels for reporting unethical practices. Financial restructuring means the banks will guide the loan taker, that is, who has taken the loan. It will ask to restructure its financial strength and improve its financial stability and improve its by becoming healthy account. And it will give proper direction to avoid from unethical practices which is following by the company. Next, impact of banking and finance on corporate world. Positive effects. How it is going to impact? Let us see on the two sides of the coin. That is, positive effects of the loans what they have given to the company. Easy access to capital for growth. When you have a money, definitely you will grow. Second, improved credit rating and reputation. When there is full of money with you, definitely you will improve your credit rating, and that will lead to the reputation. That means your name will grow. The reputation of the company will grow. Third is better corporate governance practices. When everything is fine, you will definitely follow the corporate governances, and these practices put them in the healthy condition. Number four, attraction of foreign investment. This all definitely will pave the way for inviting foreign companies or foreigners to invest in this company. That is called foreign investments. Whether it is directly or indirectly, foreign direct investment is also is there. Next, enhanced liquidity for operations. When you have money, that is enough money, the liquid money, definitely this will help your operations. When you have money, you will definitely expand your operations. This is one side, that is positive effect of when you have a money. When you have money and it is having a negative effects, that is risk of over leverage and debt burden. Debt burden in the means the burden will become heavy if you have crossed your boundaries where you are not supposed to use that money for such type of activities. Next, potential for reputation loss due to money. Potential, this will definitely lead to the reputation loss. Next, increased compliance cost and regulations. Risk of insolvency in adverse conditions. Increased compliance means we have to comply with the conditions and the rules, etc., which you have not followed, and it has gone going on increased by period. So it will become a burden to the company where it cannot follow. Risk of insolvency. This, when you are not following proper systems, regulations, rules as fixed by the banks or financial institutions, which has led to insolvency, that will pave the way to go for a seizure or closure of the company. Recent trends in corporate finance. Recent finance,
Sorry to interrupt, Srinivas garu. I think the
yeah,
time like going up, right? And we have other things to
over,
do.
madam. Last. In 1 minute, I will close. Digital lending and finance tech partnerships. Emergence on online platforms and collaborations with foreign technology companies for faster, more efficient lending. ESG. ESG means environmental, social, and governance criteria, financing and stricter norms. They have to follow all these rules. IBC norms and Basel compliance. Ongoing reforms in the insolvency and bankruptcy code and adherence to international banking regulations for capital adequacy. And we have law and regulations governing corporate finance. Thank you, madam, for this giving me this opportunity to talk on this topic.
Yeah, thank you so much, Srinivas garu, for such a long session.
Yeah.
Um, What I'm trying to tell you is these are the key factors of, this complete topic. Self subtopic itself is a big, very, very big topic. Okay. Uh, and I understand the parameters to cover up everything is also important, but not at the cost. We are not here to just give a closure for anything. Okay. What I mean to say is, initially I want to appreciate you that whatever the technology and whatever the improvements and the standards you are looking forward, you're still obtaining it. You're not thinking of your age and the criteria of your a senior or a junior. You're still taking the help from the others wherever it is required. I really appreciate that. But the main important thing is the subtopics. Once you have covered, no, the people won't show interest to perform it again. There is a place where it was very, very crucial, where the CA and the audit plays a role. You would have taken it more detail. Definitely, your presentation is very, very good when you are good at this, and this is the good opportunity that you got to perform this on the same. My special preferences is like the topic where you had the CA thing and the audit, the consent, the discomforts, everything was being labeled, right? There you would have taken an action to complete with an example, one example, how exactly it works and how it goes in vain and what are the figures